Good morning. This is Jim Colburn of Commodity Research Group. I'm here with Andy Lebow, also of Commodity Research Group, and we're here to talk about energy markets. To learn more about us, you can check out our website at commodityresearchgroup.com, where we post our podcasts and blog. We'd like to thank our friends at EKT Interactive Oil and Gas Training for hosting this podcast. Check out their newsletters, podcasts, and learning modules at ektinteractive.com. This podcast should be construed as market commentary, merely observing economic, political, and market conditions, and is not intended to refer to or endorse any specific trading system, strategy, or recommendation. We are not responsible for trading decisions taken by anyone. Information is not guaranteed to be accurate. This is not an offer to buy or sell any derivative. Today is June 14th, and good morning, Andy.
Good morning, Jim.
I'd like to kick this off right away by talking about the most recent OPEC meeting where the Saudis cut back 1 million barrels. I'm starting to get confused with the what's voluntary, what's not voluntary. But some countries are get their quotas cut back, but they're not even at their quotas already. So I guess my question is, what's actually happening to OPEC supply? And let's talk about without Russia to start.
Yeah, with just OPEC and not OPEC plus, because Russia's a whole nother saga, which I'm sure we will, delve into at some point during during the podcast. But this was a much more interesting meeting than what the market had thought going in, at least for the earlier in the week before the meeting. Most analysts, including this one, I must say, was saying that OPEC was going to keep production just about unchanged and move on. However, obviously the Saudis were not happy with the where the price was, which would have been Brent in below 75 and TI, below 70. So they did get into the very thorny problems of quotas and somehow walked around those time bombs of assigning quotas, changing quotas and everybody wanting more or less, or depending on what their um, individual goals were. But they did get it passed, and they got it passed with what the oil minister said was a lollipop for the Saudis, which was a million barrel a day cut, and an extension of the other cuts, a million barrel a day unilateral cut from the Saudis, and then an extension of other cuts that they had made a couple of months ago. So to answer your question, yeah, some countries aren't even going to be close to where their existing quotas are. Some will be right up against it, and significantly, the UAE they got an increased quota, so that for them was a big victory. But if you look at what total OPEC production is in May, after the cuts that they had engineered in April, I guess it was, OPEC production, at least according to OPEC secondary sources, which is like an average of five, and it's kind of what a lot of us use as official numbers. OPEC production in May was 28 million barrels a day, and that's down. I mean, they have cut back because the December production was 29 million barrels a day. So OPEC is down. And in June, it's probably going to stay right around here, 28.1. And then in July, we'll see the Saudi cutbacks, but there's going to be some leakage. I don't think production's going to go from 28.1 to 27.1. Our numbers at CRG are, I think OPEC production is going to be around 27.4 for the rest of the more or less for the rest of the year. Still, that's going to be down 1.5 million from the December numbers.
So that is a significant number when you take all the meetings they've had and all the discussion they've had, it turns out to be 1 million barrels, and maybe a little bit more as we go
Yeah, and
for
I think for
maybe
no, for the rest of the year, it's gonna be like a
million
million,
six.
yeah, 1,600,000, 1.5 million, 1,600,000. There's still running into, we'll see what happens, they did get a big OPEC got a quote unquote bonus by the dispute between the Iraqis and Turks, which cut back 450,000 barrels a day of production. Iraq's quota is 4.2. They're somehow producing 4.1, even with that cutback, so they've increased elsewhere.
Mm,
But we'll see once and if that dispute is resolved, where Iraq goes. Whether they say, you know what, we underproduced, and
right.
we're gonna overproduce now for a couple of months. Again, we'll see we'll see where the market's at, where they're at, and that could be an issue. And we're also, there have been some gains by Nigeria. In November, they were producing 1.18. They're at 1.27 right now.
Mm.
So they're making some gains slowly but surely. Venezuela also. So I think from those two countries, you may see a little bit more coming out, and Iran too has been able to increase production. So as I said, this is why I think it's not going to go right to 27. There's going to be some leakage.
The going into that meeting, you said, was it expected to see? Were we expected? Because the market rallied up in price, like from a low number of, I think we were around $68 in on that Wednesday, and we rallied up almost to, I guess, to 72. Now, was that, if you recall, was that expected, the market here about this 1 million cut,
Well,
or is it just a bounce?
I think the Friday rally, the Thursday or Friday rally, some of it was short covering, and then you remember there was a good jobs number,
Right.
and everything, the whole macro of which, we've been trading a lot of in this year, the whole macro rally. But then Friday afternoon, there were some news reports that came out saying, you know what, OPEC is talking about 1 million to 2 million barrel a day cutback.
Mm.
So, I think some of the big Friday afternoon rally was based on either those news items or that news coming, slowly getting into the market. So I
Yeah.
guess the answer is that the news was coming out.
Because I was tracking by Friday, I was tracking the July 75 call because on Wednesday we saw 50,000 contracts trade, and that's a big number for one strike. So kind of was eye-opening, and it was accompanied by only 10,000 increase in open interest. So it wasn't like new buyers meet new sellers. There were some buyers who probably said, we're at 68. This option expires in a week and a half, or is it? No, maybe it was 2 weeks. It expires today, June 14th. So they're probably thinking we don't have much time, and so some people probably dumped out. But we didn't get a full 50,000 increase in open interest. But as the next couple of days, the Thursday and the Friday, the $50 call was the most active option, with 14,000 and almost 20,000 on Friday trading. And on Friday, with the rally, the call settled at $1 after settling at 34 cents on Wednesday. It's now settling at $1, and we saw open interest go down by 6,500 lots. So there's probably some short call guys getting out, and maybe even some of these original call buyers getting out. They probably didn't get out of everything. And then overnight, on Sunday night, the market opened right around $75, and we saw some. Again, it was the most active option, but not a lot was trading, Sunday night. And then by the morning, the market had been coming off. So we And that again, that goes off today. So it was like a battle royale being fought on this $75 call. Lots of the original 50,000 chunk going, and then lots of size swinging back and forth. Buyers and sellers. It was like a beautiful market. Oh, yes, we're going to go past 75. No, we're not. And it looks like no, you're not won or is winning. I'm going to go out on a limb and say they won it. We're trading $69 right now. So,
Right.
but you kind of wonder when you see that volume. Often I mean, if they bought 50,000 around 34 cents, you kind of think that's a hedge fund taking a shot. And if you want to be conspiracy theorist, you'd say, well, that's got to be somebody with inside information that they know something's going to happen. But either way, the beauty about looking at option flow is you get a sense of how somebody or many people are thinking about a particular price away from today's price. So, again, we were trading in the 68 area of WTI, and somebody's willing to pay money for a $75 call with only a couple of weeks to go. So you kind of raise an eyebrow and say, what's going on there? And then we get the nice move up to 75. Couldn't hold it. I was like, pick its charge. It couldn't break through, but it did make the move. Anyway, that move was kind of disappointing. I mean, a
Yeah.
million, right? Continue to so
The move was, first of all, it wasn't talking about that Friday or the Thursday
yeah,
to Friday rally. I'm sure it didn't go unnoticed by the market that somebody was buying, 50,000
right,
75 calls. I mean,
right.
less is probably is the evidence because of the change in open interest. But nevertheless, that has to be like, whoa.
Yeah,
I wonder what's going on.
the first thing you want to know is who's doing that, right?
Who's doing it
Yeah,
right? Yeah.
yeah,
Well, yeah, during open outcry, you had a pretty good idea of who was doing it.
yeah,
But, when it's all electronic, we can only guess.
right.
Uh, um,
But it's
but
disappointing. Last time we had a podcast, I talked to you about were you disappointed in the move when it popped up the last time back in early April, and you said no, that was it moved probably as much as it should have. I thought maybe it should have gone higher, maybe not, but this time you got a million barrel cut from the Saudis. I would think that would be a pretty good price mover, but is demand flagging? Is this Russian oil out there? What do you, is it?
well, I
So
think it could be a combination of both. Plus, sentiment has been so negative on on crude and products. The market's been talking about a recession for who knew for the whole year.
right,
And they really, you could see by the commitment of traders, which is, has we've seen these big funds getting down to only 2-to-1 long crude. That's really remarkably low. So I think sentiment has definitely been a factor where people just don't want to buy it. And then from a fundamental standpoint, finally, Russian production got a lot of press last week. And, we've been talking about it and for, a lot of these podcasts, that there's really been no evidence that they're cutting back. They were supposed to cut back 500,000 barrels a day in March and definitely did not, and probably not in April. There may have been some slight cutbacks in May because of maintenances. There definitely was there was less product on the market and less Russian product on the market in in May than there was in April. So total Russian exports were down, and that the IEA said the same thing today. But let's some of these numbers. You look at OPEC. I guess OPEC has to print what they're told because in their report they've got Russian production, which was just it was around 11 million barrels a day last year, and 11.1 in the first quarter. they've got it down to like 9.5, 9.6 in the second half of the year.
Mm,
And that's fantasy. They're
I
not
mean,
cutting back.
yeah,
They're going to be we had 10.5, we're now using 10.9. I haven't seen where the IEA is I haven't seen the detail on the IEA report, and I just saw another bank report that had them had them where we were at 10.9. So if the whole year the market's thinking it's 10.2, 10.3, and all of a sudden it's 10.9, that's a big difference.
right,
Plus expectations, they're not cutting back.
right. There's no evidence.
There's no evidence.
Yeah, I see that number from Iran last month, up 61,000, and I know I kind of think, well, maybe the world is getting a little more sort of numb to sanctions, and we're getting more and more leakage. As I mean, usually that's the way it works, but maybe it's happening in now, I didn't see much chat at all about Russia supplies, Russian supplies from the IEA or the EIA reports. So
Or
I mean,
OPEC or the OPEC.
or OPEC. Yeah, it's just kind of like
That's it. They're like, all right.
w
Like I said, for OPEC, they have to print what they're told, you know,
yeah, yeah,
unfortunately. And that's the other thing that I thought was disappointing about the OPEC meeting. And I guess the Saudis just didn't want to go there, you know, but they have to be furious at the Russians uh,
yeah.
for not cutting back. So the Saudis, in essence, are going to be, continue to lose market share to the Russians. The Saudis have their own issues with MBS is building a new city, the Neom, which is going to be costing hundreds of billions of dollars. So they still want a high price environment, but and I guess they just didn't want to go after the Russians at this last meeting.
It's really interesting. The Saudi minister, Prince Abdulaziz, has kind of been slapping the IEA a little bit with their miscall on Russian oil supplies. They originally had them minus 3 million barrels off the market, which obviously never happened.
Right.
And then going back to the previous statement of, I think don't stop investing in fossil fuels, and then we hit a period where we need them very badly, especially like places like Europe. But the whereas going with this is the IEA came back with this was their June report, so they do a midterm projection, which we can talk about. Why would you do that when you're having trouble getting the next 6 months done? But um, which you sympathize with, Andy, I know.
I totally sympathize with that. I can't even get this month right.
Yeah, so you're constantly revising. But anyway, they have a steep fall off in demand for fossil fuels, and by I think 2028 they're calling for peak demand, and even before that, 2026 for peak demand in transportation fuels, and a lot of that's based in China. So I want to talk about China, but let's talk about demand first. That OPEC and the IEA, I think the IEA bumped up their demand number for 2023 to 2.4 from 2.3, and you have it much lower in the
Yeah, I have it much lower. I actually
you're
just increased it a little bit because the Chinese numbers have been coming in. At least the spring numbers have been coming in pretty good, pretty strong actually. So I did increase total demand by 100,000 barrels a day, 150 actually for 2024. But I'm still almost a million barrels a day below where they are. They're looking for monster demand in the second half from
which is
from everywhere. But China and India, of course, are the engines. But they're looking for demand to go up like 3 million barrels a day between second quarter and third quarter. That's a huge increase.
Yeah,
But I do think, Jim, the market has been, really, I don't know if it's underestimate not I don't think underestimating is the correct word, but I guess just, there's so much skepticism built in that some of these good numbers that are coming out, the market sort of just doesn't pay any attention to it, you know?
yeah, yeah.
Uh, and, I think the second half, there's gonna be a deficit, not as big as the IEA or well, OPEC numbers are, way off. But, yeah, I think there's gonna be over 1,000,000 barrels a day deficit because some of the numbers are looking better.
Right. But they have a much bigger deficit than you
Oh,
do.
yeah. They have, I mean, I could be 1.3, let's say 1.4 deficit. They're like, 2 over 2 for the, IEA and, like, over 3 for OPEC. Uh,
So
but part of OPEC's problem is low Russian production. But even if you take that out, there's still over 2,000,000 barrel a day deficit. That's a big deficit.
yeah, I think OPEC also has a stronger economic growth forecast than the EIA does. I think the EIA, where are my numbers? I can't see them right now. I think one of them's like one and a half, the other's like two or two and a half, something like that.
Yeah.
Yeah, so yeah, the OPEC is looking for plus 2.6, EIA is looking for 1.3. That's for growth, and that's significant as well. And
Oh, it's
today,
global GDP.
yeah,
Yeah,
yes.
yeah, that's very yeah.
So I mean, it's just showing you how hard it is to get a handle on these numbers. You have four esteemed organizations with, two, like two on each side. You have the OPEC, the IEA on one side, and you have the EIA and Andy Lebow on the other side.
Yeah, right.
And so
And be on the other side. And
you've
I
done
like
well
that,
against these guys.
I know, I
I,
think we've beaten these guys,
I
Jim.
think you've done, yeah, over the last,
I
through COVID. I think you
I
were
think the
did,
last few years we've really beaten these guys. I
yeah.
wish that I had the budget that they had, where they were paying me what they're paying those guys, because I think we've been doing better.
We used to call those shade tree mechanics. The other thing that came out of this, or there's many things in this short term, not short term, medium term outlook by the IEA, and that was the idea that we are going to have enough investment in fossil fuels to handle the demand changes out through 2028. And I think they had like a 11% increase in CapEx for this year, and it's like the highest since 2015. But they're just saying that it should be enough, and one of the reasons is because they have a sharp fall off in demand growth up to 2028, which is where I think I mentioned that's their peak oil demand. So, which is interesting to me because that CapEx issue has been a reason that many people had been buying back month calls for the last, I don't know, 4 or 5 years. I mean, 2020 excluded, but people who got really bullish on this oil market in the following year because they're saying nobody's going to be investing in finding new oil. And I just want to throw that at you and give me your comments.
It's really interesting, you see, I think the IEA and OPEC are still going at it in a big way.
It's like exactly.
I'm sure the IEA, that the comments by by the Saudi oil minister had to have rankled the
It's
IEA.
It
Uh,
felt like a return slap to me.
it
This,
really, yeah, because if you look at OPEC, what OPEC is saying, and of course they're talking their book, but what OPEC is saying is that there's underinvestment by hundreds of billions of dollars, and that the world needs to invest much more in fossil fuels. And it's interesting that the IEA said that there's adequate investment. But certainly, it definitely looks like there's a pivot going on amongst the majors. And I thought, Shell is a really interesting example. They had tried to they had I guess this is the reverse pivot, Jim,
Yep.
because they had uh, invested heavily and talked about the fuels of the future and becoming green. That was a big theme of theirs earlier in this decade. But now the chat has been more about investing in fossil fuels, and going back to their knitting. I don't think they're giving up by any
No,
means,
no.
um, talking about fuels of the future, but and I think you're getting this chat out of some of the other majors as well. Exxon never really did the first pivot, so they don't even have to reverse pivot. And we'll see, we'll see where Chevron goes. So yeah, so I think that what the IEA is saying has some merit, but I don't know if adequate is the right description. My own belief is there's still an underinvestment. And, is 2028 going to be the end of fossil fuel demand as we know it? I don't know.
Do-
I have doubts about that. That's only 5 years from now.
Well, they're talking.
Growth. They're talking about growth.
Yes, demand
Yeah, yeah,
growth.
yeah.
Right,
Let,
right,
let's
right,
be right, right. They're talking
right.
about growth. I mean, there's
Yeah,
still going to be
they're not going to turn into buggy whips overnight.
right, right. There's
Right.
still going to be very strong demand for fossil fuels, particularly in Africa and Asia. Maybe the growth will be less so in E. Um,
OECD.
Thank you, Jim. OECD, easy for you to say. OECD
Well,
countries, but I think we're still going to be growing out through the end of the decade. But
it's also in that report. It's interesting. They mention the growth of EVs in China, and they also talk about how the transportation fuels will peak from fossil fuel standpoint from in 2026, but some of the decline will be offset by petrochemical demand.
right,
And so that's especially like in China, especially China is like a big growth driver going forward.
exactly,
Yeah.
exactly.
Yeah. And then of course the developing countries are still going to be heavily dependent on fossil fuels and they will be growing as well. So, you know,
Right, and we still have the charging issue.
oh
That
yeah.
that's still going to be a major issue, and the grid. The grid is still,
Oh God.
is the grid going to be able to handle all this growth in EVs over the next few years? I don't see it, but
Yeah, I saw a disturbing chart. I was in 2021 we had that bad hurricane. I ended up my furnace was ruined, and they had a major incentive system to put a heat pump in the house. I put a heat pump in, and so I've had a good couple of years to look at the use, and the heat pump, even though it's efficient and my bill is lower than say heating oil, which I had before, it uses a lot of electricity, especially during those cold days. It works fine. I'm in New York, so I don't have, even the extreme days we've had, it couldn't get to its number. Like if I wanted 70 degrees, it could only get to 68. But that was when the temperature got below zero. But so it's pretty good. It's very good, but I looked at the summertime during the time where we use electricity, and the use was like more than double in the wintertime. So if you have a
well,
major push to get people on the grid during, you know, using heat pumps and then everything else, that's a big stress. Now, one thing good about it is the heat pump in the wintertime is stressed mostly the coldest time of the day, which is at night, early morning. So there's not a lot of demand for power then. And then when during the summertime, when I'm using electricity for cooling, it's a big peak demand part of the day. So there's that issue. But still, it's we're not ready for electrifying everything. That's,
No, I don't
you know,
think, I mean, the permitting process alone, which is, I think if you talk to people who are very active in that world,
yeah.
they'll almost invariably say, well, the number one hurdle is the permitting process.
Oh,
So,
right. Look what, in order to get the budget ceiling lifted, Mansion got a pipeline out of it. That's how bad it is. You
yeah,
it's
right.
basically, well, why are you putting that in the bill? Well, how else am I going to get, how am I get this thing done? I mean, yeah, that's a big problem. I think in New York State where I live, they've been trying to get some hydropower, or Quebec Hydro has been trying to, is saying, listen, you want to go green? We have all the green power you want. We have hydro, but we can't. New York State couldn't build transmission lines, and I think they finally have one coming in from Canada down to New York City. But I'm told from the beginning of the process, it took 17 years
Whoa.
because you have all these stakeholders along the way, and they don't want new lines. 'Cause why would you want a major transmission line coming through your area that's coming from Canada going to New York City? I mean, how's that help you? I mean, that's part of it, right? I mean,
Yeah,
so
that's
yeah,
all part of it.
yeah, it's not my backyard.
Right.
I
And,
understand.
and,
I
uh,
understand that. So anyway, moving along. Let's talk about pricing, Andy. I think 2 months ago, and I'm not going to. You were looking for a grinding sideways moving market to higher, and it kind of went. I want to say it was like grinding lower,
yeah, it did. It ground
right?
lower,
Yeah.
you
So
know.
let's refresh that idea going forward. What do you think? Let's
Well,
say,
I happen to still, looking at where we are in terms of what I expect for the balances, I can't say that I've changed my outlook from a grinding higher. I think what has to change though, sentiment clearly has to change. We have to start seeing stock draws. Today the weekly petroleum report had a bit, a build of 8 million barrels in crude, which was not good, and they had another 12 million in total supplies. I think the market doesn't want to. The market wants to see the opposite of that, Jim. We need to start seeing stock straw. We need to start seeing the physical market to get stronger, where the curves are actually softening here. So, if you look at the physical market, that would indicate that demand may not be, as strong as some of the numbers that are being reported. But I think, for the market to get out of its lethargy on the upside, those are going to be two important factors. Let's start seeing, actual stock draws, and let's really start seeing the physical market pick up. I think it will, but it may take, it may take time, and it's, for the fundamentalists, maybe this will be, something that, or for the market, we've been trading everything but crude actually. All these reports come out, and even on things that have nothing to do with petroleum, people will trade it, which is, a little disheartening. But that's that's the market today. But I would say let's watch inventories, and let's watch the physical market for clues that this is beginning to turn around.
yeah, if you're looking for demand increase, say in the second half of the year or going forward, it's not going to help you if you're long the front crude contract
Yeah,
necessarily.
right. And you're not
Yeah,
going to be and you don't want to see contangos.
right, right.
The D-thread D's and WTI has earlier this year was 50 cents a month. Now it's only 25 cents a month. Still backwardated, but the backwardation has really come off. So you want to see the backwardation increase. And I'd be watching D-thread D's. I'd be watching the front, and I'd be watching all the physical differentials.
Mm. There's been a lot of talk in the news about how, the people who are looking at a recession, imminent recession, probably are looking at the PMI numbers. manufacturing PMIs, and then the people who are looking at, no, we're not going into recession, are probably looking at the service PMIs, and it's the manufacturing PMIs that are correlated to diesel demand. And so, what's your feeling? Let's break it out. Gasoline, diesel. Diesel's taking it on the chin lately. Is it we bottomed out here? Do you think?
Yeah, diesel. Well, we just had a big stock build on diesel, although the crack actually held together and rallied a little bit on the diesel crack. Global diesel, even though we've had this spill, global diesel supplies are relatively low. Demand is sort of, it is lackluster. I mean, U.S. demand, the EIA on their last report, is looking for flat, right around 4 million barrels a day for the third or fourth year in a row. So, until manufacturing really turns around, I think growth may be hard to come by on diesel. And obviously, everybody's been watching the manufacturing reports. The ISMs. Now, Jim, those are important, right?
Yes, yes,
The ISM is really really has something to do with oil demand.
yes.
Oh, that's something, that's definitely something to watch. But I think this year it looks like diesel demand's going to be flat, maybe, you know, globally up or down at just a little bit, US flat. Gasoline demand, one thing that is definitely, one thing we're seeing is gasoline demand's a lot better than had been forecast. US gasoline demand, much better than forecast. I think if you look at, originally right after the Memorial Day weekend, it came out that, I think it was Gas Buddy was saying that demand was down 1.11% when it should have been up. But if you look at the EIA weeklies, it was good. These 3 weeks around Memorial Day was really good.
Uh-huh.
And I think it's one of the reasons why the gasoline crack's been on it's been on a roll. It's really been very strong. And we've also had refinery issues. So at least in the US, we'll keep watching. The gasoline demand's coming in a lot higher than than what was than I thought, frankly. I
Yeah.
thought it'd be unchanged this year, and I think we're gonna see I think we're gonna see growth.
I see the runs this week were at 16,586, I believe. If I can
Right.
read that right. That's is that like a million over last year? No, that's
No,
not, no, no. I'm sorry.
no, it's still
it's only
low. It's still low,
I'm look
relative to like the 5-year average. It's like, I don't know, 500 below
yeah.
the 5-year type average. There too, there've been issues. There was a big issue here in the Northeast, and that's one of the reasons why, gasoline took off. But it was tight last month too. And what's surprising me is that, we should be getting armadas coming into New York Harbor. Imports are picking up, and maybe we will be getting a lot of supply, and that'll be it for the backwardation in gasoline. But again, the demand's better than thought. And on the supply side, refiners haven't really fully cranked it out yet. For
I guess my question is where are these things going to max out the runs? Because they're
Oh, we have a way. I think we could get up. I think we can, let's see, this last week was 16.4,
16.6,
was it?
16,586.
Yeah, 16.586, right. That's right, 16.6. So I think we've got another 2 to 300 we can get out.
And so
Oh, 16.9. Originally, the EIA was talking 17.2 for this summer, and I don't know, that would be like a miracle. Because you also have there's these refinery problems all over the place.
mm, so gas crack, it's been firm. What going forward? We stay in this range. We any feel on that?
My feel is I'm a little bit bearish because I thought that production, as I just said, I think we have room to go on the upside on production, but these again demand's coming in a little higher. Would I buy it up here? No, I wouldn't buy it up here. If I'm a refiner, I have to look at this to be a seller for sure.
Right.
To lock something in.
It's a good number.
Yeah, it's a great. It's an awesome number for a gasoline crack. And again, if you're hedging, you're not locking in your whole. You're just doing a portion here for the refiners.
So I'm going to throw this little curveball at you. We asked the guy, you and I were on a phone call, I don't know, maybe a year and a half ago, and we asked the guy what old oil guy had done everything, asked him what part of the business he would like to be in over the next couple of years. He said refining. And I think he walked right smack into some record profits along the way.
I
Uh,
know he nailed it.
he nailed it. What do you think going forward next year and a half? What part of
Well,
the business would you like to be in?
well, it wouldn't be refining because we've got all this new refinery capacity coming on. But I think I'd like to be in the production side. I do think that there is an underinvestment, maybe not as big as OPEC has said. So I think the production side would be I'd rather be on that side than on the refining side right now.
So you see some rallies ahead. And so last question, Andy, and then I'll end it, or unless you have things we need to cover. Your oil price forecast, are we grinding? You said grinding forward to higher.
Yeah, I think I like the market to be higher in the second half. So far, Brent this year has averaged, I think it was $81 and TI like 76, close to 77. I think TI could, I think we could be at those numbers for the, at those numbers or higher for the second half.
And then
But the
the
90, the 90 to 100, that may be, that may be hard pressed unless, the IEA and OPEC are right on their demand forecasts.
then we get there.
We
Yeah.
we could get, yeah, mid 80s, 90. 90 wouldn't be out of the question if they're right.
Well, that's the two option strikes with the most open interest are the Dees 23 100 call in WTI. It's like 42,000. And in Brent, it's the Dees 23 100 call with about 44,000 open interest. So
Whoa.
yeah, so there's people, I'm sure they're hoping that happened already, but yeah, that they're gonna, I think they're going to hang on for the I'm sure they're reading the IEA and the OPEC demand numbers and looking at them very closely.
I'd hold on to them.
Yeah.
Never
No, that's right.
know.
Yeah, yeah, yeah. It's good. It's good to have those on. Andy, anything else you want to that we talk about that we didn't cover?
No, I just want to say that you could reach me at a Lebow at commodityresearchgroup.com. And I'm also on LinkedIn if you have any questions about our podcasts or any questions at all. Feel free to reach out to me.
Great. Thank you very much, Andy. I'll see you next month.
All right. See you next month, Jim.